Good morning, Scott Redler, T3 Live. I'm going to give a little bit of a strategy on Apple because a lot of people know we trade this here on all time frames and I follow it very closely, and a lot of people are concerned about the recent action. Concerned if you're just sitting in it long, but looking at it as an opportunity if you trade it both ways and if you approach it tactically. But either way, there's a lot of opportunity going on within the stock. It's just in one of those periods where you have to be light on your feet and be able to maneuver it back and forth if that's what you do. If you take a quick look at the chart, Apple tends to like to follow trends. And if you remember way back when, even before February and this huge gap up, after earnings, it gave you a nice trending move in February. What did it do? It hovered and hugged the 8-day the entire way. And then remember that 644 top? Remember we talked about that whole scenario? It started to show faulty action. It diverged from the market. PS, it broke the 8-day, sliced the 21-day, and that's when it became a trade once again. So it did correct, right, from 644 all the way down to as low as 520.28, and that was like a 120-point move to the downside. At this point, traders were having a tactical success here, and investors probably were a little bit worried. If you're a big-time macro perma bull, you weren't worried, but a lot of people were saying game over. And then what did it do? It held the 100-day. Okay, now fast forward, last quarter, bad number, came out, went below the moving averages real quickly, reclaimed them, and then held higher. And then since then, okay, this is when we had a nice macro long on it where we were holding it, hugging the 8-day the entire way, one time testing the 21-day until hitting the milestone up at 700. Okay, so right around that time period, start talking about what's next. They did their iPhone 5 release. They had their media day, and then the stocks start to change character. So something we talked about on Mad Money was, and in here every single day, is if we break the 21-day moving average, if you're an intermediate trend trader, get out of it, trade it. You can make money both long and short. It's a difference in trend. It changed. You go back to the chart and you'll see, on this day right here was the day that I got stopped out of my stock. This was on September 25th when we broke below this prior low here. I'm going to show you it a little bit closer because we're going to start looking at it closer now because that's where we are. This is when it broke 683. This was your out, and some guys got short there. Here was your first little sign when it broke above 700, closed near the lows, a time to lighten up. Then you had that gap down, but it wasn't so bad considering, that's when they first said 5 million in sales when people were expecting like 8 to 10. So you had a little bit of time to get out right here at 683. Since then, you've had a few different moves. You had a 2-day down move into support. Remember that small red dog reversal right here when it traded below 661.20, came back above. Nice trade. Okay, then what happened? You had to judge it the next day. Gave back more than a third, more than a half. You had to get out. That we talked about numbers in there. Gave you a 2-day down move into the 50-day. What usually happens on a great stock into the 50-day? Typically holds it the first time. Remember, we showed you the chart with the igniting bar around 653. Then you could have bought it when it went above 656. Gave you a nice 2-day trade. Think I was long on my virtual trade floor for those 2 days. And then what happened? 21-day, that was broken, that was support, became resistance, and you had a small little, red dog reversal here, where it went through 671.86, went as high as 674.25. Talked about 674 to 677 as resistance. It rejected it here, proved to be strong resistance. You could have gotten out after a nice tactical long. And then some guys actually got short. Why not, right? High, lower high, trending lower, and then it didn't hold the 50-day on Friday, which again, usually on the second or third time, it doesn't hold it, closing the lows. So I'm sure there's a lot of guys going home short. If you went home short, you deserve to make money because that was the trend. It showed relative weakness. So now the situation is what now? So what we know going into today is your pivot right now is 651.28. The low here is also 6. So they're really 650.65 to 651.28. Here is your pivot. This is now your new resistance area along with the 50-day that's right there. Okay? We know that we do have some bigger support. Okay, we talked about this also about a week ago, saying it could see the prior high here, which is 644. You go across there, it's also around 640. So 640 to 644, if we see that early on, people will try and buy that. I'm coming in flat today, I will try and buy that, especially if you see a divergence. So people say, what's a divergence? A divergence is just say Apple's down around 644, we're down 6-7 handles in the futures. We open up, futures continue lower, Apple doesn't go down, then you try it versus a low. And then you see if there's commitment to it, and you measure it along the way up. How fast and furious is it, etc. So if you go back to the chart, this is an area that should at least be looked at if it gets there. So it might open up at 646 and turn around and then reclaim, get back above 650, 651, put a tail in, and that could be the trade. And then we need to see if it reclaims the 50-day or not. All right, so that's scenario A. Scenario B is it comes down to this area, whether it's 641, 642, 644, diverges, gives you a shot, and then maybe later in the day it ignites and you see a nice move and you could add to it and stay with it, and then we see how it handles that. Or it doesn't hold this. If it doesn't hold this area, the 100-day moving average in the next few sessions is all the way down at 619. Remember the last breakout we played, guys? Right around 623, that's right around here. So there is a shot. And there's a lot of guys talking about how this is a head and shoulders top, which it looks, like it definitely had the makings of it. The left shoulder, the head, the right shoulder, from 700 to just say 660, that's 40 points. That takes you down to about 620. Doesn't mean it has to happen in the next few sessions, but it could happen. Earnings are the 25th. Now, I was kidding around in the morning call saying, I stopped off in the Short Hills Mall to see if I can get my iPhone 5 because I just wanted to check it out. Verizon, can't get it till October 25th. Apple Store, you can't get it there. You have to go on, on a reservation system at 10 o'clock, come in the next day. They only hold it 24 hours. So there's still supply constraints. So to me, I do think that they're going to have problems with the third quarter. But the fourth quarter is going to be, in my opinion, blockbuster. So the question is, how does it trade between now and then? Sometimes they like to discount it as much as they can going into earnings. So if the earnings aren't great this quarter, it's already discounted. So if it gaps down, it can go higher, or it may not even gap down because then people will say the fourth quarter is going to be where it's at. So either way, know your time frame. Today, if you're coming in short, I would definitely cover some on the open. If you're looking to get long, see where the first 15-minute pivot is, trade versus that. Big support, 640 to 644. If you see a divergence, I'm sure I'll be there. Listen to my radio, my chat. I'll try and tweet about it if I have enough, thumbs. And then, underneath that, 638, and then there are some levels, but then really the 100-day at 620, which is the measured move of that head and shoulders pattern, is where the destiny of this stock might go, going either into earnings or maybe on a bad report. Who knows? But at this point, it's in motion. Guys are making money long. Guys are making money short. If you're a macro investor holding it for a long period of time, we've seen this in the past. Don't start jumping out of windows. They still have a low PE. You got a lot going on there. In my humble opinion, I don't think the historic highs are in. But at this point, you never really truly know that until you watch the action develop. And for me, I'm an intermediate trend trader. It changed when we broke the 21-day. I think there'll be opportunity this week. So, be patient. Don't do too much too quickly. And if you want, tune into my radio, tune into my chat, because this will be my focus. Have a great day. Scott Relative Live.